Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This show is brought to you by CommercialAgentSuccess.com. Check it out for the ultimate and commercial broker training. It's 21 one-hour videos. There's forms. There's a calculator. It's fantastic. You'll love it. If you're an agent or you know an agent wants to be really good at commercial brokerage, have them check it out, CommercialAgentSuccess.com. Well, today we're going to talk about a submarket of commercial real estate that's kind of seems like it's always fairly popular and stable through all market cycles. Here we are in the end of January, beginning of February of 2024. And, the interest rates have kind of hopefully just now stabilized as of December, what the Fed's saying. Maybe rates are coming down a little bit in some places. But what's happening with the single tenant net lease investment market? Well, let's find out. Please welcome my guest. It's Nancy Miller, and Nancy is president of the National Single Tenant Net Lease Investment Group at Bull Realty. That's a mouthful. Nancy, thanks for joining us.
Thank you, Michael. Glad to be here.
So, Nancy, you've been doing the single tenant net lease investment property sales, mainly throughout the Southeast for a very long career. As we went through this cycle, I guess you've seen some similarities to past cycles and maybe some new things. Kind of what jumps out to you about that single tenant net lease investment market today compared to maybe past cycles?
Well, I think we're starting to see some energy back in the cycle. Last year, because of interest rates and still suppressed cap rates, it was a little slower. We're starting to see a little bit more electricity in the market. More buyers are out there. We want to get a little bit more supply out there, but all things considered, I'm kind of optimistic about 24 and 25 as well, as the feds try to normalize things.
Yeah. And, and through all property types, we've seen a slowdown in transaction volume. What did you see in 2023 for volume compared to 2 years before in the single tenant net lease world?
It was down probably 20 to 30% in total transaction volume. Some of the larger tenants had a lot of transactions, but those were down also a little bit across the board. And we had some new players that started entering the market in 23, some new startup concepts and so forth. But, everyone is still in the market, but it's just starting to pick up a bit, I think, and we'll see more and more of that with the new construction as well. Yeah.
And when I look at the single tenant net lease properties hitting the market, it seems like I'm seeing a wild variation on cap rates. I'm still seeing some 4s, and 3.5s. And then I'm seeing some, 7s and things on some, looks like some really strong national tenants. What are you seeing for cap rate trends right now?
Cap rates do vary, as you said. The 3s and 4s are probably ground leases, in my estimation.
Mm-hmm.
Chick-fil-A loves their ground leases, and they can get a pretty penny for them, if you like Chick-fil-A. But we're seeing a variation. The higher cap rates are starting to come in as some of the developers are realizing their properties aren't selling at these recent historic low cap rates, so they're having to gradually increase them. So we're seeing some of that. We're also seeing a little bit more activity in national tenants that have shorter lease terms, and they can come to us with a 7+ cap rate, and the investor is still getting a very strong national credit tenant with all the bells and whistles of that, but they're not buying in at a 5.5 or 6 cap rate. So we're seeing a little bit of all that. And some folks are still stuck in the low cap rate mentality, which is not keeping them on, it is keeping them on the market far longer.
Yeah. And what were average cap rates, say, in 2022 compared to 2023? How much did you see things kind of overall increase?
There's probably a 40 basis point difference. So if I was at a 5.6 cap rate with some of the national credit tenants, I may be at a 6 cap rate this year for the very same property. And that's kind of what's happening across the board. I think that the sellers, if you're not a developer, a seller is still looking for the bottom cap rate that they can get, top dollar, and they're realizing that that's not happening. And we're seeing that a lot of price decreases and cap rate increases to counterbalance if they want to sell. And those sellers who are selling are pretty much wanting to invest back in the market.
Interesting. So what are some sample properties that are available today as far as the tenant and the cap rate?
The most prolific is your dollar stores today. They still remain by far. They sell not in the tens and not in the 20s, but in the hundreds. Where we started at the beginning of 2023, cap rates for our typical 15-year triple net Dollar General might have been at a 6 cap or a 5.95. That same property today could be a 6.75 cap. We're seeing all kinds of more franchise properties for sale, franchise locations, but the market velocity in terms of how many properties are on the market right now, I think everybody is looking but not jumping in the water to sell, and it's actually a great time for a buyer, in my opinion.
Yeah. Well, if you're a cash buyer, it's certainly you're getting a better return, right, than you were even a year ago. But
absolutely,
most buyers prefer to get some debt. What are you seeing for loans available on these national credit long-term lease deals?
Lenders like them a lot. They are, because cap rates are not as high as they used to be, that becomes a constraint where the lenders will ask for a higher loan to value, where typically I would do a 30 to 35% loan to value, 2022 and 21. I'm likely to see today somewhere between a 40 and 50%
equity requirement.
Right. And you made it rate-wise, we're seeing they like triple nets and they like double nets, the lenders. They love them. And the reason for that is obviously the long-term stability of them. And we're seeing typically a 25 or 30-year AM. We're seeing a 5-year balloon where we normally would see a 7 or a 10-year balloon. But I spoke with a lender the other day who said they're now starting to do non-recourse loans, which shows more confidence in the market. So I think people can get very good loans. And
what rates range are you seeing?
I would say that in the national credit tenant net lease environment where you've got a strong tenant, you're probably looking at high 6s to low 7s pretty much.
Okay.
And that's come down just a little bit too.
Yeah. And that's helpful. When you look at interest rates historically, it still seems like a good rate. But if you've been in the business only 10 years or so, it's
that's
like,
right.
what?
That's
what?
right.
What happened to free money, right?
That's right.
What are some of the popular brands that investors like buying these days?
They like the tried and true, the dollar stores, of course. Dollar Tree is really starting to grow. They also like typically Starbucks and your fast foods, your Wendy's and so forth. I've had a lot of activity in recent times in the auto tire area and auto such as your Christian Brothers and your Caliber Collisions and your Mavis Tire and your Goodyear and so forth, because regardless of our economy and regardless of coming out of COVID and regardless of the quote-unquote concern about EV or electric vehicles, people still have to take care of their vehicles. So that whole sector is one that I would say is quite strong, and it's stronger. And I've got a lot of activity currently in that sector as well.
Yeah, that's interesting. So overall, we're seeing all property types seem to start picking up some momentum. Even banks thinking, hey, maybe we'd go ahead and get through this and work this out, or take this property back and get it on the market. But the single tenant net lease world has always seemed to be considered a safe haven, right? In times of down cycles. What do you expect for velocity and cap rates moving forward through 2024?
I would say that my crystal ball is not much better than anyone else's, but in talking to lenders and in talking with people who are out there in the world, I think we're going to see maybe a 10 to 20 to 25% improvement in cap rates, basis points. So, for example, if I was at a 6.5 cap rate right now, I could look to buy somewhere in this year 6.75 to 6.9. So we're going to see an uplift in cap rates.
So if you're a buyer, it's good news.
It's very good news. Okay. And the other thing I always encourage people, they kind of say, yeah, but those rates, and I say, I said, how much are you making on your CDs? How much are you making on your, your other investments in the market? And they say, whatever, 5.5%, 5.25%. Well, take a look at what net lease investing, which is so secure long-term, will do for you. And by the way, can you depreciate your stocks and securities and your CDs? The answer, of course, is no. And so there are so many tax advantages of being in commercial real estate, specifically my area, net lease, because it's a long-term investment horizon, which is, if I'm doing long-term planning, financial planning, I like that.
Yeah, and it's not like, I guess, potential in the stock market is you have really big losses, right? I guess in real estate, you still always have the real estate there. Single tenant net lease investment properties is one of the places that we kind of go to when investors are buying their first commercial properties, right? If there's nothing that fits their own companies that they control to be a tenant. The single tenant net lease world seems to be a great place. What would you tell investors who maybe are out there looking for acquisitions today in the net lease world?
I would tell them to not be concerned about where the property is. I would say look at the companies out there, the tenants, look at the brands that you frequent. Do you go to what fast foods do you go to? Where do you have your car service? Where do you this, that, and the other? What do you use? And then don't worry about, are they in your local environment, your local town? The whole purpose of a net lease property is that it's pretty much hands off. It's, as we say, you press the easy button. Mm-hmm. And so I would tell people to don't constrain yourself to where your state that you live in. Look for opportunities. It could be anywhere. It could be in a small town, a large town. If that property is a national credit tenant, that means it's a strong lease guarantee, and you don't care. And if they have a history that they've been in that location for years and years, chances are they're not going anywhere.
Yeah.
That's kind of...
Well, that's great. And we sold a bunch of single tenant net lease properties to a family, and I think we sold them about 12 of them. And it was interesting. They asked, well, you guys, will you manage this for us? And I'm like, you don't need us to manage it. Mm-hmm. Well, what do you mean? I said, well, if a tenant ever calls you, whatever they ask you, just say no. If it gets beyond that, then call me. So, and they're true triple net, long-term leases, and not a lot to do. But if a tenant talks to you about a lease renegotiation or something like that, then pull us in. But everyday business, there's not much really to do.
Shouldn't be.
Mailbox money, right?
That's right. It shouldn't be.
What about sellers today? It's like some sellers of like we sold some office properties, and everybody says, oh, office is in tank. Mm-hmm. But then we got some office properties that are selling for really big numbers, and I think it's because of where they're located and they're smaller sized, or they've got really good tenants in there with long-term leases. What do you see in the net lease world?
We're seeing a great, I wouldn't say great values, but we're seeing great stability. I think there is a lot out there. One of the things that I often will do, though, is if I know, let's say you say to me, I really like Goodyear. I'll make that up. And I'm looking around. I can't find any Goodyears, but I know where to go to find who the owners, the sellers are for those Goodyears, and I'll say to them, we've got a very qualified buyer who likes this property type, and I will then see if we can make a deal. And oftentimes the seller says, well, I don't know what I do with my money. I don't want to have to pay taxes. And I'll say, no problem. We can do it. We'll help you with a 1031 exchange. I've done that a few times, and people seem to do well with that. And you just, reinvest the money and move up. If you make a few dollars on what you bought this good year and you sell it, make a few more dollars, suddenly you take a small investment and it's now become a larger and larger investment as you parlay it. And that's what people like to do in this environment. That's very typical.
That's a good point. We're seeing more and more in some of the property types that we sell of folks, especially if they're retirement age, looking at owner financing of these deals and doing an installment sale so that you have the better tax advantages. And then you have the income, right, from the mortgage. So you have tax advantages. Maybe you get more for the property. You've got less cost, more buyers. So there's kind of three benefits there. But when I think of single tenant net lease, I don't think too much of owner finance. Are you seeing any of that yet?
No, not really. I think people want out of it because they want to do an exchange, a 1031 exchange, and they want to go into another property that maybe has more years left on a new lease, or it's just the property that they've found and they like it. It's not as common in the net lease sector to see owner financing, but that shouldn't be something we should overlook, certainly. And what we're also seeing is more motivation from sellers because all of these great loans that were in place 5 years ago that were really low, some of them are ballooning now. And the sellers don't want to come back in the market and take their 3.5% or 4% interest rate and pay a little more. They say, let me sell this and take a profit, and let me see what I want to do next. If I want to do a 1031 or I want to go pay the taxes and so forth. So we're seeing a lot of that.
And Nancy, you mentioned some of the advantages of a single tenant net lease property as compared to other kind of safe investment vehicles, the tax advantages and depreciation advantages. But what do you say to an investor who doesn't like potential thought of negative leverage, where maybe they're getting a 6 cap property and they've got to pay 6.5% or 7% on their loan? We've seen traditionally through past downturns, people still making money with negative leverage. But what are they saying in your world today?
Well, that's something that you have to consider. But if you put enough money down at the front end, the 40 or 50% down, in all likelihood, you'll have positive cash flow. The second thing you want to look for in a net lease property is rent increases. So over a period of time, my going in may be a 6 cap. But if I have rent increases every year or every 5 years, or in some cases with dollar stores, there are a longer term to get a rent bump. But when I have those rent increases, my yield over a period of time it becomes far better, and my negative cash flow will go away. And chances are that property is going to appreciate in value as opposed to depreciate, just because over time land cost and building cost today, we've seen with some of the developers we work with, they've had a 20 to 30% increase in the cost of the materials and construction and so forth. So if you bought something in the olden days or older property, that property, just because of the cost of replacing it, that property is inherently worth more.
Interesting.
Today.
And that's interesting. I think a lot of people are looking at that as well, is the price per pound or price per square foot, the lower bases that you can get into, especially if you're not a highly leveraged buyer, right? And you're a long-term hold, which most commercial real estate is considered long-term hold, not liquid. So if you're buying at lower bases, it might be a real good time to buy. Well, what would you leave our audience with to think about in the single tenant net lease world, Nancy?
I would say, good question. I would say use this as an opportunity to learn about the net lease world. If you're listening to these shows that you do, people are interested in them, I would say there is no downside to looking. Work with a broker. I'm glad to talk with people. I talk with people all the time. to introduce them to it if they're first-time investors. Very experienced investors, now is a good time to find out what your property is worth, because there's a little bit of a shortage of good real estate on the market right now. So you may be able to get a more premium price today than you might as interest rates go down.
Yeah. Well, good point. Always good to know what your property might bring so you can make good decisions either way. Well, Nancy, thanks for joining us. Good information. Thank you.
Thank you. It was fun.
All right.
Take care.
Thank you. And thanks for joining us around the country. Thanks for sharing the show. Please reach out to us. And until next week, be sure that you always lead, learn, and laugh. And join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For commercial brokerage sales and leasing in the Southeast U.S., contact our show host by email at michael@bullrealty.com. By Commercial Agent Success Strategies, 21 incredible one-hour agent training videos. Learn more at commercialagentsuccess.com. And by Lument. For senior housing, healthcare, and multifamily financing, visit lumet.com. For more podcasts and videos, subscribe and visit creshow.com.